Hey, everybody, welcome back to another episode. I'm your host, Brandon Cobb. Today, I've got Chad Harris on the show. He started buying rentals in 2013. And get this, guys, we're going to be talking about how he bought, I think, over 80 doors today, literally using none of his own money, financing, raising capital from investors. I'm excited to talk about today. He's raised millions of dollars, structured deals with sellers to provide that financing. He's built a management system to make his rentals completely passive, which obviously is going to give you a lot of freedom there. And today I'm going to excited because he's going to share some specific steps for buying real estate without using any of your own money. Chad, welcome to the show.
Thank you. Thank you for having me, Brandon. Glad to be here.
Yeah, it's good to see you again. So, for those that don't know who you are, what is your story? How did you get in real estate?
How did I get into real estate? I got into real estate in a very odd way. I was serving in ministry. My whole family lived in the desert of Northwest Kenya and had nothing to do with real estate whatsoever. And then we came back after living there 4 years for the birth of my fourth child. And when he was born, he had health issues. Couldn't fly, needed a breathing machine, couldn't live in a remote setting. And so my job was ending, right? We couldn't return to it. The house that had been provided by a supporting church we had to move out of. I didn't even have a vehicle. And I just needed to provide for my family. And it was kind of a miserable place to be, wanting to provide for my family, but also deep down, I just felt like I hadn't been providing what they deserved financially. And so I decided to go into real estate. I just committed to it and I went out and I started telling people, hey, I'm buying real estate, I'm buying rentals, right? And keep in mind, I had no money in savings. I looked terrible to a bank. There was no real logical way I should have been able to buy rentals. But over and over, I heard people say, oh, I always wanted to do that. I wish I had bought it when I looked into it, or I almost bought a rental 10 years ago. I wish I had because they've gone up in value, or I love watching those shows on HGTV, right? And I realized there was an opportunity there where they could be the lender in my business and I could buy the rentals that I wanted. And I was used to raising money for ministry, raised over $1 million for the ministry that we were a part of. So I just pivoted and started raising money for real estate and ran from there.
What were you doing as your job in Kenya? You said ministry, and you had your whole family there.
Yeah, so we could go way down the rabbit hole, but we were serving with a church planting team, and the team had built schools, built clinics, planted churches. And my job was I was a teacher, and my job was to travel from village to village and really teach and empower the local leaders so that they could take over the school and the clinic and all of the ministries that had come from the missionary team so that it was a local ministry and
Mm.
not a Western ministry was my role.
Very noble, but obviously probably didn't pay a whole lot.
It did not pay a whole lot. No, I think my salary when I got started into real estate was 2000 a month, and really not a way to stack up a lot of capital, right? With 2000 a month as your salary, but obviously that wasn't why I had the job. So,
Yeah.
yeah.
So take us back to, how did you go about acquiring 80 doors with none of your own money?
Yeah. Yeah,
Because
so
I'm
when
sure like you've created enough cash flow where you can live off that now, right? Is that fair to assume?
completely, yeah.
Completely. Yeah.
I live
So
off of it. The staff takes care of the rentals. I get to speak and coach and do all the things that I really enjoy.
mm,
So it's provided me freedom beyond what I expected and really allowed me to provide more for my family than I ever expected to be able to provide in that short amount of time. So, okay, so how did we structure the deals or how did we get started? So, in 2013, at least I think in most areas of the country or most markets, there were a lot of foreclosures, right? That was coming out of the recession. Um, There were a lot of houses available on the MLS, and financing was still pretty tight. And so if you could get a hold of capital, you could find deals. The finding the deal was easy. It was just hard to find the money. And so I just worked my network and just shared with everybody what I was doing and presented them the opportunity to get into real estate, which so many people really want, without the headaches of finding deals and dealing with tenants and contractors and all of the difficulties that most investors run into. I presented the opportunity where people I knew could get in my deal as the lender. They could share in the profits just like a bank where they get monthly payments, and they wouldn't have to deal with any of those headaches. And so I was buying properties in the beginning off the MLS, and I would fund it with money from a private lender. They would fund the rehab. And then I was doing the BRRRR strategy before it was an acronym, but banks weren't really lending, or they weren't willing to lend to me anyway. So I would refinance with another private lender. So raise money for the short-term purchase and rehab, refinance with another lender who liked long-term, and I just recycled the money as fast as I could. So at about
Were these
25
private
years,
lenders doing the long term stuff, or were they
oh
some
yeah,
form of bank? Okay, so like it was a
private lenders.
normal kind of. We'll kind of go into how you find these people, but you've got one private lender set up that wanted to fund your fix and flip project, liked it, and then you had another that you'd refinance their money out with that was like, hey, I want a longer term note on this.
Yeah, yeah, completely.
What were
So
the terms that you were raising money for on the fix and flip and then the long term?
yeah, it's the terms with our lenders are always the same, whether they want long or short term. It's we're just appealing to what they want. If they want liquidity and they want their money back, we'll pay it back quickly. If they want it invested and want a steady return, we'll keep it. Right? We're there to serve them. That's the whole basis of my business. And our ideal lender, I mean, I started completely wrong. Right. I paid high percentage. I was offering 10% when I started. I was doing an amortized payment or actually paid them principal back monthly and tried to pay them their money back quickly. And over time, I realized that my ideal private lender doesn't want any of that. They want
Huh.
a low interest, a low return. They want long term and they want interest only. They want to keep their principal invested and sitting there getting return on their money. And so that is still our ideal. I still raise money 6% interest, interest only, 10-year note.
Did y'all hear that? Interest only 6% note. Wow. I mean, that's like what you would get at a bank. So that I've never raised, by the way, I've never raised money at 6%. That's super impressive. When we were doing a lot of our fix and flip stuff 10 years ago, it was 10%. 10% is what we were raising.
Hmm.
But we were doing it in a way where there was no monthly payments until the property sold just because of cash flow for the business at that point. And similar story, we were paying these outrageous 15% loans, hard money, and monthly payments. And God, it was like $20,000 a month at one point just in interest payments. I was like, God, how do you grow your fix and flip business? This is impossible. And of course it was, with the hard money loans that you're
Yeah,
running.
yeah.
So very impressive. So 6% if you're fix and flipping it and a shorter time period, and then 6% if you're doing the longer time period. That is absolutely incredible. So how do you find these magic unicorn lenders that will give you money for your rentals at 6%?
So I figured it out over time, right? Who my ideal lender was. So I started at 10% because I thought that's what they required, right? That was kind of a standard, or it seemed like a typical return in real estate. And then I'll never forget, I was meeting with one of my lenders. I was trying to reduce the cost of my money, right, that I was borrowing. So I presented him with two deals. And this lender was super sophisticated guy, president of a company in our town. I mean, understood investments through and through. And I presented one at 10%, like he had lent on before, and I presented another investment at 8%. And I tried to incentivize the eight, and I'll never forget, he listened to the two and he said, 10% sounds risky. Let's do eight. And I realized that for someone who is used to investing in stocks and looking at dividends, the return is a measurement of the risk. And so if we offer 10% or 12%, to them, that looks very risky. And as we reduce the return we're willing to pay, that reduces the risk, right? In their mind, and also tangibly because our payment is lower. So there's more cushion, there's more margin. So obviously there's less risk. So he borrowed at eight. I thought, hey, let's go to seven. The next meeting went to seven, raise more money. Next meeting, six, raise more money. And I've just stuck at six.
So, I mean, he literally suggested to bump it from 10 to 8 because he thought just changing that number was going to make it less risky.
Yeah. In his
What?
mind, okay. And if you think about it, if you're looking at a company that's willing to offer a 10% dividend, let's say, versus an 8% dividend, generally there's a reason they're going to offer 10, and that is because there's more risk involved with
Yeah.
that company, right?
Yeah.
And so, for my ideal lender, someone who is not in real estate, they're in the stock market, mutual funds, things like that, and they've been told their entire life diversification is good. They should look at ways to diversify their portfolio. They know real estate is a really good investment. They just don't know how to get into it.
Yeah.
And so we present an opportunity for them to get into real estate, diversify their portfolio, and we present it in a way that it fits the comparisons they're making on stocks. So the return we pay is low, which equates to low risk or lower risk. In
Mhm.
other investments, the interest only payment is not typical in real estate long term, but that's very similar to a dividend, and leaving their principal invested and only getting the return on their principal is just like a dividend as well.
That is fascinating, guy. You just broke one of my limiting beliefs, like that you can go raise money out there at 6%. I am that I'm seriously, I'm stoked that you told me that because I'm like, now I
Awesome.
kind of want to go try that.
Yeah, yeah. So,
Hey, I can just
and
reduce all the risk on all of our real estate deals by giving you less money. Like I wonder how that's going to go over when I have that conversation with everybody.
well, and here's, this is where it really comes home. As real estate investors, we're usually very numbers oriented, right?
Yeah.
We're used to the spreadsheets. We're used to just comparing returns. But for our ideal lender, okay, I had lunch with a lender. This has been about a year ago, and I had never met him before. He had funded three of my deals just through email, and being updated on what our business was doing. And so we had lunch, and most of the lunch we're just catching up, talking, learning about each other. He cares most about traveling with his grandkids. My focus is on my kids, right? My family. We're just at different stages in life. And at the end of the lunch, I asked if he was satisfied with his investments, if he would be looking for more investments, right, in the year ahead. And I'll never forget when I asked, are you satisfied with your investments? He said, yeah, it's amazing. My financial planner has told me to expect 4% in retirement, okay, which is the standard that financial planners
Yeah.
present. And so 4%, he's like, you pay much more than that. So I'm very happy. Now, in his mind, we look at, okay, 4% versus 6%. If we just look at the numbers, that's not drastically different. But if he's going to go on four trips with the returns from his investments, and now he gets to go on six trips with his grandchildren, that's huge, right?
Yeah.
Tangibly, that is life changing just in the experiences that he gets to have because of the increased return versus what his financial planner has been telling him to expect. So,
It's the magic of if you really understand your target avatar and what their perception is, what their problem is, that can change everything. Like you said,
yeah.
if you know that they're being told 4% and that's a win, well, yeah, you're 6%. It's all perception. Your 6% is now amazing. I love that. All right. So continue on. How do you find these unicorn 6% investors?
Yeah. So, once we accept, right, who these investors are, they are people who have money in the stock market or mutual funds. They're used to comparing investments. They may have retirement accounts. They have a financial planner. Okay. If that's our ideal lender, then really they're not that rare. There are those people all over the place, right? And so we just need to get the word out and share the opportunity that we have for them to be a lender in our business because their financial planner does not offer that as one of the choices, right? We have to kind of educate them on this new opportunity. So there's really three ways. One is kind of the shotgun approach, where you just share in every social setting, real quick, why you do, what you do, and how others can play a part. Super simple, really fast, right? I love fixing up houses, improving my community. I fix up beat up houses, rent them to great families, and I share profits with friends, family, and people I know. That's it. And you can say that. I mean, when I was really raising a lot of money, I said that to the cashier when I checked out at the store. I said that in every room I was in, right? Anytime I had the opportunity to speak, it was, "Hi, I'm Chad Harris, blah, blah, blah. Why I do, what I do, how they can play a part." And over time, not only did I naturally attract lenders from that, after I'd been doing it for a long time, I had other people introduce me that way, right? Hey, have you met Chad? He likes fixing up neighborhoods. He fixes houses, rents them to people, and shares profit with other people he knows, right? Now they're advocating for me. So that's one way. Another way is just leveraging your phone. Everybody has who knows how many contacts in your phone, and just working that list of people you already know, setting a meeting, learning about what they're investing in, and just presenting the opportunity, how they could play a part in your business. The people that we know naturally, they want to support us, they want to be involved, and when we present an opportunity that fits what they want investing wise anyway, they're naturally going to want to do it. So that's another one. Sometimes people worry, like, do I really want to borrow money from friends and family or people I know? I'm going to have to see them at Thanksgiving, right? That's kind of a cliche argument. And I would ask, if your sister started a coffee shop, wouldn't you show up and buy coffee, right? Don't you naturally want to do business with the people you know, like, and trust already? And
Yeah.
if you actually have an opportunity, if your business is going to make money, wouldn't you rather the profits go to the people you care about rather than the bank? Right? I like that my business is generating profits for all kinds of people that I know. I love that.
I love
Uh,
that too.
yeah. And then a third way is just leveraging social media. So
Mhm.
it's amazing if you just post regularly, do two kinds of posts. One, which is just a snapshot. Here's what I'm doing, right? People love posts of weird bathrooms with, 4x4 pink tile or whatever strange thing you see on a walkthrough. Or do a hero post, which, most people say, I want to talk about my business on social media, but I don't want to brag or come across as bragging. And the solution to that is doing a post where you're not the hero, but your lender is. So if you do a post and you say, oh man, we got this deal under contract, we're going to flip it or we're going to fix it up and rent it out and then refinance and pay off our private lender. Our lender is excited to be improving the neighborhood and getting a great return on his money. Okay. In that post, the lender is the hero. And the people who see the post should identify with that lender and wonder, how can I be the lender in his deal? Right?
Yeah. I
Yeah.
I love that. Yeah. And so what's interesting is your way of going about doing this. So I do something similar. Uh, the way I was kind of taught was to first create curiosity and have them start asking you about it. It's like, well, how do you do that? And it's to take two things that everybody understands and bridge them together. So like when I was raising money for fix and flip projects, people say, "Hey, Brian, what do you do?" I'd be like, "Oh, I'm a real estate day trader." And they're like, huh? What's real estate day trading? Well, what I do is I raise money from friends and family. We do the HGTV thing. We fix and flip the house, and then we split profits with friends and family.
Nice. I like it. Yeah. Great.
So just that curiosity, like getting them to ask you more about it, so that you can kind of go into more detail, right?
Yeah.
Um,
Yeah.
so I like your approach too on it. Okay, so once you've been able to rate, so you've got the formula for finding these investors that will fund your fix and flip projects or your rentals long term. Excellent job laying that out because I'd never thought to use a private investor for a long term loan. By the way, like that was kind of eye opening for me. What can you do with this? How did you utilize this capital raising strategy to acquire the rentals that you have, like once you get access to the capital, how do you go about creating that financial freedom from the rental properties?
Yeah. Yeah. So there's multiple ways on the front end everybody struggles with. That's a good question. Honestly, Brandon, I'm like, all right, now we're getting to the meat and potatoes of how you actually build a portfolio and get that freedom that everybody desires, right?
Yeah.
Because too many people I see, they get into real estate and they say, "Oh, I want financial freedom. I know real estate is the way to do it." But then they struggle with the down payment or they struggle with raising enough money or having enough capital for the rental, and they end up wholesaling or doing other things, which don't really lead to the financial freedom, right? Financial freedom is going to come from owning real estate over time. So there's the famous quote, what is it? Real estate, more millionaires have been created by owning real estate. Um, and usually we focus on the real estate, but the reality is the owning is the important word,
Yeah.
right? Not by transacting real estate, but owning real estate. So, yeah, so for me and the way my clients primarily do it is we're going to make offers either directly to the seller or listed properties, and we're going to make it based on the 70% rule. So the purchase and rehab is going to be 70% or less than the after repair value, right? Or what the house will be worth after it's fixed up. And we're going to make those offers knowing we already have a commitment from a private lender who has said, I will lend money up to this amount. And
Mhm.
so we can have just massive confidence making offer after offer after offer, knowing that the money is just sitting there waiting,
Yeah.
right? And so we're going to structure it where the lender will fund the deal and they will pay for the rehab. A lot of times they'll pay a little bit extra. So it'll cover something that may be unforeseen, or if you're accurate in your scope of work, then you just get a little bit of money on the front end. So when you buy the property, you get $5,000 to $10,000. And if that offer isn't accepted, if they need more than that 70%, then we're going to offer the seller financed offer where they get a little bit more money, but the seller gets paid over time. So that's
Hmm.
how we structure the deals. And for me, I did my first 25 deals, all private money. And the only way, right, I had no day job when I started. So the only way I could survive and feed my family and clothe my children and all those really important things was because every time I purchased a property, I raised more than I needed for the purchase and rehab. And then every time I refinanced the property, I got back more than was owed to the first lender. So every purchase, I got a little chunk of cash, and every refinance, I got a chunk of cash. And as long as I kept doing deals, right? I had cash flow to build the portfolio, and then once the portfolio is to a big enough size, you have the cash flow automatically inherently.
So yeah, you were borrowing a little bit more than you needed on the front end, making a little bit of money there, for your time. And then when you refinanced, you paid off the lender. The loan that you got on the property was more than
Yep.
the previous loan. So you get to kind of keep that. So you're making those, and then you're pocketing the cash flow that comes off of it at the same time. I
Yeah.
freaking love this.
Awesome. All right. It
Yeah.
worked out well for me too. It
Yeah,
worked
I can
for our
tell. I can
clients
really
very
tell.
well.
Now, I
So
know you teach this stuff. I think you've got like an event or something coming up in March when you teach this. I think it's like one rental to freedom or something. Like, what is that? And then how can people sign up for something like that if they want to learn more?
yeah, definitely. So I hold a webinar every month where I walk through the process, how to find deals, how to fund deals without using any of your own money, and then exactly how, when you build a portfolio of rentals, it doesn't have to be huge, just 5 to 10 rentals, you build wealth very quickly. That workshop is one rental to freedom workshop, and you can register, sign up, get from more information at number one rental, number two freedom.com.
All right. And we'll make sure that gets posted in the show notes. And I think you've got like a free giveaway too, no?
Yeah, I do. So every time that I talk about finding private lenders and what we offer our lenders and how they lend us money and the terms, people say, where do you find those rare lenders, right?
Yeah. Yeah.
You
Yeah,
know?
I'm calling them unicorns. Yeah.
Yeah. Yeah. So after hearing that question over and over, I just made a list of great places to find them. And you can get that at truewealthinvestors.com/find lenders. It's a list of 37 places. I said I was going to make a list of 30, then I just kept going. It was 37. I added some, so it's 37 plus places to find private lenders. And when you download that list, it'll give you encouragement that there are places all over where you can have those very intentional conversations, build that relationship so that you can raise money for your deal. It's really not as hard as most people think once you're intentional about talking to the right people.
I love it, Chad. It's been a pleasure having you on the show. If you got value from this, guys, share this with somebody that needs to hear it and leave us a review. We will see you guys next time. Thanks for coming on, Chad.
Thanks, Brandon. Enjoyed it.